understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Friday. Welcome to another episode of the Tech Behind FinTech. Truly excited today. Today's episode, empowering farmers, enhancing credit approval processes in Agri-FinTech. I'm joined by my guest, Faan Basson. Did I pronounce the last name correctly, Faan?
Yes, that's correct, yes.
Okay, excellent. Thanks for joining. Faan, I'm going to go over Faan's bio and what in terms of Agri-FinTech. Faan is a business and equity partnership manager. Let me introduce his bio, and we're going to get into a great conversation around Agri-FinTech. Faan Basson, born and raised near Cape Town, South Africa, Faan has dedicated the past 25 years to various aspects of the agriculture value chain. He's been involved as a primary producer of consumer goods, pouring his heart and soul into his family farm. In 2016, faced with the challenge of family succession, Faan made the difficult decision to sell the farm, but put his passion for the industry remained unwavering. Faan found his true calling in the agri-tech landscape. He played a pivotal role in the launch of the groundbreaking IoT technology with Vodafone Africa, championing smart farming to enhance on-farm productivity and empower data-driven decision-making. In 2019, Faan and his family embarked on an exciting new chapter, immigrating to New Zealand in pursuit of a fresh start. For the past 4 years, he has served as a corporate agribusiness banker, leveraging his expertise to propel the industry forward. And just 10 months ago, Faan joined a private equity firm, laser focused on enabling young individuals to step into farm ownership, ensuring a bright future for the next generation. Faan's commitment to continuous growth and knowledge led him to recently complete his MBA, with his capstone project delving into the intricacies of the bank credit decision-making process and removing information asymmetries in the context of farming. Welcome, Faan, to the show.
Thank you, Namdi. Thank you for having me. I'm really honored to be on your show. Can't wait to get talking about something that's very dear to my heart.
So let me just do some housekeeping, and then we're going to jump right into it. So for all of those joining the Tech Behind FinTech and the new viewers we have, we're streaming live from Facebook, LinkedIn, YouTube, and Twitch. We also have a live stream going from Instagram on the side to get behind the scenes footage. As always with the show, sometimes we talk about the news and get into the topic. This topic is so big, we're going to jump right into the topic. So for the past few months, earlier this year, I learned about Agri-FinTech, and I've been searching for an expert in the space because I wanted to learn more about it, and I wanted our audience to learn more about the Agri-FinTech market, which is seemingly pretty new. So Faan, man, very interesting, you know. It's a lot I want to get into, but I don't think we ever had someone who owned a farm on the show. Can you describe farm life for me?
Okay, so Namdi, as I said just on backstage, is you basically get free farming enterprises model. So one would be your big commercial farms, the big corporate farms. Then you'll get like a small family farm, and then you'll get a sustainable farmer. I want to say that's your smaller scale farmers that farms in informal settlements. That really doesn't have any availability to banking facilities or credit facilities, in for a matter of fact. So I was I want to say a family farm. I'm leaning towards commercial. So the size of the business would put me in a commercial bracket, but it was a family farm. And I think I was probably a 50 or a 60 percentile farmer when it came to capabilities and operational management. And it was always a struggle at the end of the month to make ends meet, sitting with cash flows. We had a dairy farm, we had vineyards, we had some cropping, some olives, we had a piggery. So we had various amounts of income streams on the farm, but it was all from agriculture. And Yeah, it was just a beast at the end of the month to pay the bank, to pay all your suppliers. And although my mom is a chartered accountant, we didn't have the knack to actually unlock the potential of the property and to unlock value creation on our farm to actually be financially sustainable. So we had to sell the farm. Yeah, and so my passion is, I know for a fact that 90% of the farmers in the world not won't struggle, but they're on the edge of making ends meet or facing foreclosure. The bank will always use the stick to say, "Oh, we're going to foreclose on the farm," to drive a bit of a performance, which I think is a bad way of doing things. So yeah, my passion is just for those people sitting around the kitchen table every night with the family, trying to make budgets work, see where they can cut costs. Yeah, so that's the passion. That's what's driving me in the industry, and that's what I have a passion for. And just I want to assure people that's on farms there's always a way out, and there's always a way to increase performance. And hopefully, this conversation today can help them.
No, that's excellent. So a couple of things I want to dive back into earlier. So what's the difference between a small farm and a sustainable farm?
I want to say, so your sustainable farms, and I'm going to use South Africa here as an example because, okay, let's switch it around. So in America, I want to say 99% of the farmers are commercial or family farms, and 1% would be a sustainable farmer. I want to call it a backyard farmer, a guy who keeps 10 pigs, 2 sheep, maybe 1 cow in his backyard or on a small piece of land.
Okay.
But in Africa, in South Africa specifically, it's switched around totally. You'll have about 40,000 commercial farmers, and you'll have about 500,000 or to 1 million sustainable smallholding farmers. So that's the difference.
I got
and
it.
those are the guys that's struggling to get access to capital or credit facilities with the banks. Your family farms and your corporate farms will always have access to some form of capital, an overdraft or a bank loan. And the difference between the family farm and the commercial farm is the commercial farmers will have a guy like me working for them. It's either a chartered accountant or a guy with an MBA or a guy with a normal B-commerce degree that has got some either financial institutional work behind them or working experience or banking experience. And it just makes a easier conversation at the table when you negotiate your interest rates. Family farms is normally you'd have dad, son, mom, maybe son's wife on the farm working. It might be that the daughter is farming with her boyfriend, or that's just the normal situation that I'm from in South Africa. They would try to save costs wherever they can. So it would be the farmer negotiating with the banks on a term deal, right? And that's where the information asymmetries comes into play. The bank would know too much about his business. He wouldn't know too much about the bank's business. So he's always in a lose-lose situation. Although the bank will sell him that he's in a win-win situation. And then your sustainable farmers, which doesn't have any financial acumen, they are hardworking, and they maybe keep a few pigs, sell to the neighbor, trade with a few vegetables. Yeah, and so the challenge is in Africa is to get funds to some of the family farms and the sustainable farmers. But I want to say to the sustainable farmers, it would be unsecured lending, but it's making sure those guys use the funds to actually be more productive.
No, very, very interesting, because especially on the unsecured lending aspect, from a sustainable farm and how you just described it, they don't have the collateral because it's extremely small to put on. But on the commercial side, I would assume the farm itself, the land itself, serves as the collateral for the bank loan. Is that accurate?
That's correct. And so just to give you an overview, so in some countries you don't get collateral. So you can always get collateral against your property. Okay. In some countries you can get collateral over your livestock. Some countries you don't. Like South Africa don't provide any security over livestock just because there's a huge stock theft component in Africa. But in the US, and I want to say the majority of your first world countries, because there's a standardized system, there's auctions every week, there's a big control over diseases for livestock, that you can actually supply some form of collateral against the livestock. And then you can get security over some of your co-op shares and they can take a lien over your harvest if you're a cropping farmer. So that's the type of collateral that's in farming.
So, I have a background not only in IT but also real estate. I've been doing that for a while, and I would just make the general, just on based off of that, I would assume now the farms that are able to provide that collateral, their terms will be more favorable, interest rates lower, and so forth. Is that accurate?
Oh yes. So what makes agriculture a bit different with the loan is you get your LVR values and you get your security values, and those are two different things. But normally with agricultural land as a collateral, you can get up to 65% security. In first world countries, in third world countries, it would be about 50% of bank value. And that's bank value, that's not market value. Banks will always take a very conservative calculation on your property value.
Okay, so it's going to be a lot lower than the market value when you say bank value.
I would say about 10% less if you on a rule of thumb, take 10% less.
Okay, and based on that, that's going to determine the amount of money that you can borrow, because now the collateral it's lower. Okay,
so,
I understand.
And it will determine, if your security position is quite good, you'll also get a better rate from the bank, a better margin.
Okay, I can understand that. So now, rewinding, you mentioned now on a commercial farms, they'll have a person like you, someone from MBA, some type of management consultant negotiating their deal. What difference does that make in terms of looking at the family farm, who they're doing it themselves, and the commercial farm?
That's a really good question. So I would say on a bank margin perspective, it would be between 50 and 100 basis points difference.
Wow.
It will also be the difference between interest only and principal and interest repayments. It will also be on, when there's a new deal on the table, a leverage position. That's your three main differences. And the one thing that people don't take into account is bankers are there to make deals. So they see a bit of a lazy balance sheet and they see a property that's within the vicinity of this farmer or that farmer, or they know that that farmer has got an appetite to buy another farm to scale up a bit. They will actually try to make the deal work, but they'll only do that for their top performers, top banking performing clients. Now, that's either a guy that's got a low balance sheet, that's actually performing average on farm, but he can sustain another level of debt. Or it will be a guy that's, I want to say, leverage not to the max, but close enough. But if he buys a farm, he gets more volume, he can easily repay the bank's money just because he's got more volume in the game or scale in the game. So the bankers is responsible for that, or not responsible for that, but 80%, if you're a good banker, you would want to get your customers onto more farmland.
So now, okay, so essentially from the bank's perspective, their goal is to assist this farmer in scaling up.
Yes.
So this is how I want to paint the picture. So we're going how it's traditionally been done. We're going to segue into the agri-FinTech. Before we do that, what happens if there is a default action on the loan?
The last thing the bank want to do is sell your farm. So they'll try to put in perimeters for you and targets to hit to make sure that you toe the line with them, basically. So and that's why with small family farms, it will be principal and interest. So if you default on a loan, you can also always go interest only. But with your larger corporate farms, the volume is so great that they'd say, okay, we'll go interest only for the first 12 months, but then we need to have some form of principal back just to safeguard them. And then if you default on a loan, there's probably a 36-month process before they will actually eventually try to sell you up. Like, you'll go through consultation, the bank will put 3 or 4 bankers on your case to give them monthly cash flows and updates and hours of trading. And it's not to put the pressure on you, it's just to make the management a bit easier, to make sure that you know that you know what's going on in your property and making sure that you actually trade out of this positively.
So you obviously had a family farm, you've been in the business for a while. Shifting gears to present time, what is Agri-FinTech and how has that changed the banking process in dealing with farms?
Okay, so let's divide that into two. So let's see Agri-FinTech. Let's just talk about that landscape. So Agri-FinTech is basically people sitting outside of the banks, because I mean, one or two of your podcasts is actually people talking about the old bank legacy systems. Like the systems is so old, it's like a DOS 123 systems out of the 80s. That's what banks use. Your ATMs is still running off Windows XP. So what people in the outsiders realize is that the credit process is actually so slow because it's the old legacy system going into Excel formulas, and then the Excel needs to make a credit decision making tool. There's a credit decision making tree, and there's a credit rating and all of that. So what they try to establish is, let's make the process easier. But the thing is, the bank works on a budget. The bank can only build certain capabilities on certain times of the year. So what Agri-FinTech, we started basically was for the sustainable farmers and saying, hey, this guy's keeping a few goats, a few pigs, maybe a few cows in his backyard or on his small holding, and he's trying to make a living. But if he puts a roof up here, or if he puts in a bit of better infrastructure for the pigs, he can actually have a better weaning rate, and he can actually sell more produce. He can actually be more sustainable. And it might cost him, say, $20,000 to do that. But how do we lend this guy $20,000 unsecured to actually put in their improvements and actually keep the tabs on them? Because it's not 1,000 guys, there's 500,000 guys. Okay, so now they went out to Agri-FinTech and said, okay, right, let's first start with a bit of a trading history. So you trade, because normally these farmers will trade on a cash basis or on a product to product basis. Like, I'll give you one pig, let you give me fruit and vegetables for 6 months with his neighbor, right? So now they
So
say,
like a bartering system.
Yes.
Okay.
So what they'll do is they'll say, right, we want to be able in a year to provide you with some credit or some form of financing, but we need a bit of a trading history. So how do we get this? Well, you join the app and then you start trading with your neighbor, and you trade with either, I want to say, one of your supermarket chains. You start selling vegetables to your supermarket chain, and that gets onto this app. So now we've got a trading history of 6 months, and from that they go and say, right, we think this guy's credit worth, say, for $5,000-$6,000, so we can actually finance a bit of fertilizer in here. We can finance a bit of crop protection in here. We can finance maybe shade nets if he's a vegetable farmer. You know, all that kind of materials to make him more sustainable and more efficient. And then, so that's how that starts, but it will have a credit limit. But now you can imagine a bank signing up 500,000 new customers. It's all your FICA stuff, all of that needs to happen. So it becomes a funnel. And yes, and then does the economy want to participate in that way to actually uplift these guys? So that's where Agri-FinTech started. And the other side of Agri-FinTech is, because of long credit decision-making processes within the bank, because of the legacy systems, is they're trying to build credit tools in the back where you can actually quicken up or excel the credit decision-making process. Because if you go to a commercial banker, right, and say you want to buy the laundromat in town, or the fuel service station, or the local manufacturing, commercial bankers will tell you within a day if you're credit worthy or not. They'll have a look at your cash flow, they'll have a look at that business cash flow, they'll figure out the synergies and say, right, this is how much you can pay this guy. You'll probably have a handshake deal and you can buy the business. But with farming, it's a bit different in the sense that the systems are so archaic that it takes 10, 15 days to get a credit approval out of the bank.
10 to 15 days. All right. So bringing it back to the world I know in real estate, right?
Yeah.
Closing on a property in 30 days is pretty. That's good. That's not bad.
Yeah.
What does 10 to 15 or even 20 days means to a farmer not getting credit?
Well, I think, again, we need to talk about the credit, two different credits. So every farmer will basically, and again, family farms and commercial farmers will have an overdraft. If you've got a short-term need, you can basically get the overdraft in a day, right? But that's for short-term funding, and it will possibly reduce by that amount at the end of the month. Say you want to buy livestock, but if you want to buy a property, physical land, that takes 10 to 15 days. And I don't know the systems in the US, but typically in New Zealand, most farms are sold on a tender process. So you'll have a tender date 3 months from now. With the tender closes, you've got 3 months to do the credit process. Very little farms actually transact on the, I want to say, on the brink of an idea. But I know for a fact in South Africa, there's farms doesn't close on tender. It's an open market, so first come, first serve. And I don't know what the US is like. Maybe the US is like also first come, first serve. So between me calling up the banker and say, hey, are we liquid to do this? Now remember, people think bankers sit in the bank twiddling their thumbs waiting for the next deal. I don't know if a lot of people realize, but every single farming business in the world, if you're with the bank and you've got a credit facility, needs to have an annual review done on their accounts. So they go through your accounts, they review if you've still got the right credit facilities, the right products to farm, and if you're still credit worthy as you were 12 months ago. The issue of that is they do that off financial accounts. Now, financial accounts, when it reaches the bank, is 18-month-old data. Nobody makes decisions on 18-month-old data. They look at now and cash flows going forward. So there's always where Agri-FinTech comes into play.
I want to jump back into your definition of Agri-FinTech and how it started. Just to give, just to summarize certain aspects, just get your confirmation. So from a sustainable farmer standpoint, this Agri-FinTech, they somehow contact them. Now they are initially, it's just about establishing credit. So yes. through some sort of barter system. This is like their own personal credit report, but within this particular application. Yeah. Then after that, they can then assess and see, okay, this person's been consistent for this amount of time. Now we can open up a pool of funds, relatively small, for them to do some sort of things they need to do to improve their business.
Yeah.
Have you seen cases in which, obviously when they do that now, it's advantageous to that particular Agri-FinTech app to keep those sustainable farmers within the app? Have you seen cases where once the sustainable farmer now is in one app, they can still take that history and go to another app, another Agri-FinTech business? Or do they have to just stay within that one can they transition to other ones, or have there been situations where they're using multiple concurrently?
Yes, they can. There's a case study being done in Kenya at this stage. The dairy industry in Kenya is a lot like the dairy industry in India. We've got one guy owning 1 or 2 or 3 cows, and they physically need to take the stainless steel container of milk to the co-op and get paid. Now, in the past, they got paid by cash, and they would get robbed by the mob once they left the co-op. So now I think it's called Safaricom, which is like Vodafone in Kenya. It started a receipt system. So you go in there, you deliver your milk, you basically get a token with the amount of milk you deliver to the co-op. And that token, you can go to the local co-op and buy food produce, food for your home, food for your cattle, all of that stuff. So if there's a competition coming into Kenya, say there's another cell phone company, because in Africa, you need to build this off a cell phone service because people are connected through mobile. That's the only way they can connect. So if another mobile carrier comes in and they want to replicate, they can use the same system. They will maybe have to fine-tune it for their mobile service provider, but they can use the same system.
Very, very interesting. Yeah. Okay. some other questions now. You know, I know you did your thesis on this, and there was some questions that I had around that. You mentioned before in this conversation, also in reading your paper, the lack of transparency. And
Yeah.
the question is, how does the lack of transparency in the credit approval parameters affect farmers in the agriculture business when engaging with banks and financiers?
Oh, it's I actually got that idea of the information asymmetries from Airbnb and Uber
Hmm.
and Bookabetch or these kind of businesses. Airbnb removed all of information asymmetries between the hotel industry and the consumers because they basically told you what a room is worth at night. Where's the profit margins? There's so many people that run Airbnbs that now understands how the hotel business works. And what I'm saying is that when a bank comes and sits on the opposite side of the table when he works with a farmer, is the bank has got your financial information. They know everything about you, right? But they also know, do you fit in the credit perimeter box? Like, is it I want to say your interest coverage ratio? Is it your free cash flow? They know that parameters, but they don't tell the farmer that. So they're like to the farmer is, give us your financial information, give us your cash flows, give us your year-to-date actuals, and we will tell you if you're creditworthy, which I think is not fair. Where I feel is, give us some information up front. Tell us this is the 5 parameters that we think or that we are looking at, and this is the actual margins or parameters in that. I want to say they give you the 5 parameters and they tell you what's the thresholds in each of those parameters. Then you as a farmer can go to your accountant and say, right, this is what I want to do. I tick 3 out of the 5 boxes and then submit it to the bank. But now everybody's going in blind, and that's unfair. But in commercial businesses, they will tell you, call up a commercial banker today, Namdi, and ask him, hey, I want to buy the Chuck E. Cheese down in town, and they'll tell you, all right, you need a 40% deposit. Your free cash flow needs to be 25% of your gross margin. You know, they will tell you exactly what the parameters is. You will actually sit down there with a cash flow, if you signed an NDA of the Chuck E. Cheese, you'll know what their free cash flows is. You'll make and say, right, we are either good to go or not, or you'll be on the cusp, but you'll call the bank and say, this is my calculations. I'll send it through to you. Let's have a quick workshop. And you'll know within a day if you can actually do it. But in the farming business, it's not like that. In the agribusiness, it's not. They keep a lot of information to themselves.
Simple question. How have you seen that in like, how have you seen that hurt the farmer? Are you saying that because of the lack of transparency and not having these thresholds and buckets, the banker can then charge additional fees that they were not going to charge prior? How has the lack of transparency actually impacted that sustainable? Well, it'll be a small farm. How have you seen that happen?
I wouldn't say it's got to do with fees. I'll tell you what, it has to do a lot with confidence. It's if I tell you, let's take the NFL for the US audiences. They've got the drafts, right? They know you've got to have a 40-meter sprint time. You've got to, if you're a quarterback, you need to throw the balls in this area, this area. This is your hand speed, all of that. You need to weigh this much. You know, they give you the parameters. But if they don't give you, if they tell everybody in the NFL tomorrow, we're changing the rules, we're changing anything else, you're just going to have 400 players show up and we're going to put you through some fitness tests. The guys would be so much more stressed because they don't know what the test looks like or they can't prepare for that. And that's the same with banking is. When a big commercial farm has got a guy like me working for them, I know the inside out of the bank. But your small family farm don't want to spend that money on a guy like that or a consultant or going to his accountant to sit in the room when they deal with the bank, and they're losing out because there's nobody to fight their case. Like there's nobody skilled in the room to fight their case, and that's where they lose out on deals.
Okay, I think I can follow that. the the and the question, another question along the line, right? I think it kind of ties in. Do you see agri-fintech businesses assisting with that lack of transparency now? How
Yes,
how does the agri-fintech step into to help with that?
because the Agri-FinTech will have your live data immediately. They'll have your trading history. They will provide you. And then Agri-FinTech will go to the bank and say, right, what's your parameters? And they'll do the calculations in the back line of what the parameters is. So what happens then is you go out and you press a button and say, right, am I eligible for funds from bank ABC or this credit union? And it will tell you yes, no, or yeah, you'll basically be pre-approved. So that's the role of Agri-FinTech for me. And Agri-FinTech is their wider audience is having systems talk to one another, because there's so many farming systems out there, and just standardizing it to the, I want to say, the country-specific banking industry. That's where they've got a huge role to play.
What are some like in industry players? Like, what are some known agri-fintech companies?
Oh
Like
man,
big
you put
ones.
me on the spot like that.
I'm sorry about that. I apologize.
I
shouldn't have shot you that quick. I just literally thought about it as we were talking. That's how some of these conversations go.
If you just give me a second, can I quickly go onto LinkedIn and get one or two of the guys that I'm following that's doing great work in the industry?
Of course.
Yeah.
It's a very dynamic episode.
Yes.
Because I'm curious, because like I've the reason I asked, I haven't in the space, I haven't done a lot of work in that, and I'm just curious to like some players in that agri-fintech space that's changing the game.
Let me just see. So these. Can we touch base at the end of the thing? I'll have to search my Gmail. There's a few guys in there.
Yeah, no, it's so. Around how long is this industry in terms of this segment of fintech been around, agri-fintech?
I would say about 10 years. That's maximum.
Okay.
Because they realize there's a big commodity, or there's a big market in this. Just on another thing, Namdi, is fintech's role here is what banks are currently doing. They're putting every farm. I want to say your top quintile performers and your 50% quintile farmers in the same box with the same credit parameters. With Agri-FinTech, is they can actually say who's your best performers by looking at satellite data, harvest yields, apart from costing, just a good performer. Like, you can always cut out costs out of a business, but who's a real performer that actually harvests the most efficient way, or getting the most corn or the most wheat off a field? And Agri-FinTech has got a big role to play in that, and say, hey, you're providing a credit facility for this guy, but he's actually a 50% farmer. But you're providing a much lower credit facility for this guy, and he's actually a top quintile performer. You should actually be pumping your money into this guy because your returns will be better.
In your bio, I read about an IoT project you did with Vodafone. And I want to ask, and this is something I just thought about, within this agri-fintech space, have you seen any cases where they're using IoT devices, technology within the farm, sustainable farm itself, to get live data of what's happening in the harvest, and then leveraging that for some sort of to make certain decisions, or adding it to their data? You seen any integration with that, with the agri-fintech?
Yes, namely, I've seen it, and I've seen how it changes people's or farmers' lives. Like a simple water IoT water reader is a massive thing for a farmer, just to see if there's a water leak on his farm, if his livestock is drinking enough water. That's a simple IoT device that can make a hell of a lot of difference. Another IoT device would be a weather station, just saying how much did it rain last night on certain paddocks, how much wind is blowing, why is this crop drying out. All your IoT devices can basically, I think, talk to John Deere's capabilities in the tractor. And like these combine harvesters that harvest your wheat and corn, they are so sophisticated these days. They can tell you how much the yield is immediately on farm. They can tell you the moisture content of your corn or your wheat while you're harvesting it. So those systems talk to one another. And that's what I did for Vodafone. Vodafone established a SaaS system where all your IoT devices and all your farming software and everybody can plug in on one network and then actually provide that data to be a more efficient farmer. Because that was the problem, is you've had Agri-FinTech and agricultural technology boomed at the same time, but nobody was willing to talk to one another because it was the race to the bottom to get it on farm as cheaply as possible. And what Vodafone realized is if we can get a mezzanine where everybody can talk to one another, that will be more beneficial for farmers.
Very, very interesting. Number one, like, extremely. I want to jump back into you said the first thing you said about the IoT device that's a game changer for farmers. Yeah. The water leakage device, like what is that and how does that work?
So let's take a livestock farm or a vegetable farm, right? You've got a certain water allocation that you can use because water is either from a dam somewhere or a reservoir system or a river system where you've got a consent to take only a certain amount of water, right? If you've got a leak in a pipe, right, you keep on pumping water out of the river, it might be 5 or 6 or 7 days before you see a leak because the grass will just sprout just more on that place. But if you've got an IoT water meter, you can say, right, I had this many acres today, I watered this amount of crops, this is the water that through, and this is the water that should be going through, and the meter is telling me this is exactly what went through. Or I have so many cows on the paddock, they drink, say, 10, 15 liters a day, this is how much water it into. But now the water meter is telling you, well, you used 3 times as much water as you thought you would. So there's a leak on the line and you pay for water. Everywhere you pay for water. So that's the difference between a $3,000 bill for water or a $30,000 bill for water.
It's huge.
Yes, huge.
Interesting. Switching tracks, because this is something I wanted to cover before we leave. And I know I'm going to be respectful for your time. Before I even came across Agri-FinTech, I read different things, and I want to drill into this with you. I think it was in India, I was reading that in terms of maybe it was the sustainable farms or small farms, extremely stressful to the point where suicide rates were high among farmers. And I want to confirm that with you. Because I read it a while ago, but I've never had the opportunity on this show to talk to someone in this space to even address that. And the reason I'm asking is because I wanted maybe the Agri-FinTech can assist with that. So just want to get your thoughts on that.
Listen, Namdi, mental health issues among farmers is a real problem in the world. And that's just because of legislations and compliance. And that's Agri-FinTech can lessen that by taking away some of the compliance because we're doubling and triple handling the same data. Because the bank wants a report on your environmental sustainability. Everybody wants, it's just the way it is. But now they tell the farmer, hey, you've got to submit these 4 reports which you didn't have to present last year. You need to cut down on your fertilizer usage, all of that. And the farmer sits there. He's a small business owner in a sense. And he doesn't know if he can make it work with half the amount of fertilizer. He doesn't have time to do 4 consulting reports for the bank. So that all plays up. And I think a family farm is basically your dad gave you a business to run. And if you can't make it work, that reflects, it's not a reflection on your personality, but it's people take it personally. And that's why there's such a high suicide rate among farmers, because they don't know if they will be in business tomorrow.
It's in fact a true thing in terms of.
It's
okay.
really true. It's a real thing.
Because I was so like somewhat surprised by it. I don't remember the year I read it. It was years ago. It was one of those, you know, I'm an information junkie, man. I consume a lot of information, and I came across. I was like, wow, I never would have thought that. And talking to you in terms of I literally wanted to just bring it up to touch base on it. Very, very interesting, fun. I've asked different questions, and this based on my scope of knowledge. Is there anything in addition that the audience should know that could help them understand this better that I didn't cover that you might want to touch on?
From the audience perspective, I think the more information they have in the food value chain about the farming community and what the farmers actually go through would help them understand when they buy a product. And and from an agri-fintech perspective, there's so much information out there about what farmers are actually doing. They can educate themselves a bit more. And Agri-FinTech has got a huge role to play in that by removing information asymmetries between the farmer and the bank, and actually help setting up farmers for success and actually provide food sustainability for the world.
What are your thoughts around that in terms of just from a global perspective, food scarcity, number one, and the growing population in terms of people living longer and things of that nature? Because that plays back into farming and the food supply chain. Overall thoughts on that?
Normally, my thoughts about food scarcity is, I'll use an example. I heard a story about a guy that bought a farm in Russia about 10 years ago, and they were trying to get a wheat farm going in Russia. But just because of some corruption or the deal didn't go through, or they did farm it for 1 or 2 years and then they tried to sell it. But guess who was the people that actually tried to buy the farm? It was Hyundai from South Korea, because in South Korea and Asian countries, there's a real fear of food scarcity. So they're trying to buy farms in I want to say in countries where they can actually put up big wheat and corn farms. People don't realize how big Africa is, and that I want to say 85% of unused land in Africa can still be used for agricultural produce. So Africa will become the breadbasket of the world at some stage because it's an untapped source. So there's never going to be a food scarcity. Your big players will always try to get crops that can get more yields. And I mean, farming is a way of living, and people actually enjoy it. So they're incentivized to produce foods.
And last question I've had, because you mentioned, commercial farms, and they have different. On an average, what's the market for a commercial farm in terms of the value, the dollar values that, from a revenue perspective, on your average commercial farm?
Man, I can't say. Like, I don't know what the land prices in the US. I can talk about land prices maybe in New Zealand a bit. So a normal sheep and beef farm would be about $15,000 to $20,000 New Zealand per hectare. And a dairy farm would be about $40,000 per hectare. You can work on that average. I don't know what the prices in the USA is.
Trust that. Fun. Extremely fascinating. When I come across guests like yourself who have an expertise in a certain area of fintech and so forth, I call you a friend of the show. So what does that mean? When something happens, like news related, that's big, that people are confused on, I'm gonna call on you and say, listen, Faan, and also I want to thank you so much for your time, because I know it's an ungodly hour right now on Saturday in New Zealand. So thank you for taking the time out to come on the show. I really, really appreciate it, because we're not in the same time zone. But I definitely, you consider you a friend of the show, man, because it's just so many questions, and totally new for me, and I'm assuming my audience as well. So really, really thank you for taking the time out and answering these questions and educating us on agri-fintech and the agri-technology in general and farm life, man.
Yeah, well, it's my passion. It's what I like to do. So, Namdi, I just want to say thank you for the opportunity to be on the show. I really enjoyed it. I've listened to 3 or 4 of your other podcasts, which is amazing. Just want to say thank you for the work that you do out there, and thank you for reaching out. And yeah, hopefully we can have another conversation somewhere in the future. If you've got any questions, do not hesitate to reach out. And if there's somebody in your audience that want to have a chat about it, or maybe want to have a talk about a farming business that they think can be more profitable or something, just reach out to me. I'm more than happy to have a chat.
And speaking of which, can you let the audience know how to get in contact with you?
They can reach out on my LinkedIn. I'm on LinkedIn, Faan Basson. That's my name. Yeah, they can reach out and we can have a conversation. And yeah, hopefully we can find some common ground and move forward.
All right, that sounds good. I have to give a word to our sponsor at this moment. This show is sponsored by Strategic Generation, using cybersecurity to enable the sales and partnership and enablement, providing SOC 2 ready services along with pen testing and vCISO work. Thank you to our sponsor. Faan, thank you very, very much for joining. As he mentioned, you can find him on LinkedIn if you have questions, additional questions, or want to understand more about increasing the value of your farm. Every Friday, 12 p.m. Eastern Standard Time, we are live on LinkedIn. You can find us on the Tech Behind FinTech for links on LinkedIn, YouTube, Twitch, and Facebook. We also have a separate stream going from Instagram. So I thank everyone who joined us from Instagram as well behind the scenes. On that note, that concludes our show for today. Faan, have a brilliant and exciting weekend. Once again, thank you very much for taking the time out Saturday odd hours of the morning in New Zealand to come.
It's only a pleasure, man. It's only a pleasure. Thank you, Namdi, and we'll chat again.
Yes, sir. Cheers.
Cheers, man. Bye.
Bye. Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.